the best of Money Matters. Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares rose in early trade today after US President Donald Trump delayed the start of tariffs on Mexico and Canada for a month. So at the opening bell, the Straits Times Index was up 0.6% to 3,849 points after some 32 million securities changed hands in the broader market. Now that has changed as we edge towards market close, and we do have the closing numbers now, so let's take you through them. The STI ended marginally in the red, down 0.09%. We're looking at 3,823 points. In terms of value turnover, that's 1.2 billion Sing dollars. Gainers outnumbered losers, 311 versus 221. Top advances for today, we've got here Spindex Industries, GMH USD, and New Incorporation USD. And top decliners for today, we've got here Venture Core, Asus, and Jardine Cycle and Carriage. Now, in terms of companies to watch, we have for you CapitaLand Investment, given how the asset manager will invest more than $700 million in a freehold land parcel in Osaka, Japan. And that is to develop a data center with 50 megawatts of capacity. Now, elsewhere, from U.S. President Donald Trump delaying that stiff tariffs on Mexico and Canada to news of Chinese tariffs on U.S. coal and liquified natural gas imports, we've got more international headlines in focus. And joining me on the line today is Kelvin Wong, Senior Analyst at OANDA. Kelvin, welcome.
Thank you for the invitation again.
Great to have you back with us on the show. And Kelvin, let's start by looking at global market sentiment. A lot of things happening all at the same time, things changing very quickly here. But first up, we've got U.S. President Donald Trump saying that he would delay the imposition of those stiff tariffs from Mexico and Canada for a month. And that's after he said he struck deals with Canada and Mexico on immigration and fentanyl. And Trump also said he would hold last-minute talks with Chinese counterpart Xi Jinping. We'll hold on to that thought on China first. But looking at what's happening to Mexico and Canada, how are global investors reacting to Trump's comments when it comes down to equity and currency movements?
Yes, if you look at the situation right now, I think things are not set in really certainty yet. Things could change in the last minute kind of situation, especially with U.S. President Trump's style of policy implementation, where he tends to create a bit of element of surprise. So what investors are looking at right now is primarily more of a very cautious stance. If you look at it, the kind of situation over here, we start to see the dollar still remains on a firm footing. If you look at the dollar index, it's still holding above the kind of the 20-day and 50-day moving average as a support. And what we could see over here is that higher beta currency that is more commodities related, like the Aussie and the CAD, still remains weak against the dollar. And we also start to see a bit of we call it exhaustion on the major U.S. stock indices, primarily driven by the higher beta, heavily tech-focused Nasdaq 100.
Okay. And Kelvin, if we look at the Singapore stock market, how did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in, particularly towards the afternoon when we got news of China? How did the STI fluctuate as well?
Yes, so if you look at these, it shouldn't be a big surprise to me because companies that component stocks of the STI that are heavily reliant on the external economy actually underperform today. But Venture is the worst performer among the component stocks. They are down by negative 3.2%, and as well as Yang Shipping, which is down by negative 0.66%. And the top performer will be more related to company-specific news, like CapitaLand Investment, which is up by 1.65% today.
Okay. You talked about CapitaLand Investment. Let's zoom in on that. What is happening here is that CapitaLand Investment will invest more than $700 million in a freehold land parcel in Osaka, and that is to develop a data center with 50 megawatts of capacity. Earlier you mentioned it closed up 1.6%. Before that, it was about 2%, if I recall correctly, about 4 p.m. So I know you do not comment on individual firms, but generally speaking, how significant was the move?
Because if you look at the situation over here, investors or market participants seem to view this as a rather positive, we call it driver for CapitaLand Investment share price, given the fact that they are now diversifying away from traditional, we call it property investment, like malls, and as well as we're talking about hospitality. So now they're going to what I call cutting-edge AI, highly technology-driven infrastructure, which is data center is one of them. And the data center, they're actually looking to invest in the next portfolio to add into their data center portfolio. So I believe that they currently own 27 data centers. So this could be the 28th one to develop in Japan. And we know that Japan is likely to be a very close ally of U.S. in this ongoing U.S. high-tech war rivalry with China. And also, if you look at the share price of this CapitaLand Invest, last week or so, it has really dipped to a 52-week low at around this 2.4 level. So given that such cheap valuation relatively to the other component stocks and other REITs as REITs, so that actually kind of affected this positive price impact today for CapitaLand Invest.
Now, from CapitaLand Invest, Kelvin, let's talk about S-REITs. We've been talking about REITs quite some time now because of the slew of earnings that were out. We've got Capital Infrastructure Trust and Lendlease Global Commercial REIT announcing their latest distribution numbers. DPUs, they were down for the half year ended December. Any notable trends about the industry that we can suss up from the results?
Yeah, for sure. So if you look at the lackluster growth of DPU as a whole on the average, so this causes the S-REIT index to actually underperform the STI since late last year. And if you look at from a technical perspective, momentum is still weak. So since the start of this year, they actually failed to actually surpass their 200-day moving average. So what we are looking at right now is that it seems to us that there is still no light at the end of the dark tunnel for S-REIT at this moment, in terms of a momentum factor perspective, and as well that if the DPU trend continues to remain lackluster, we could still see potential, we call it price weakness on the S-REIT index.
Now, if you're just tuning in, we're now in conversation with Kelvin Wong, Senior Analyst at OANDA. Well, Kelvin, across the region, we must talk about China. China's Finance Ministry announced additional 15% tariffs on coal and LNG imports from the U.S., among others. Now, earlier we saw news of how Trump said he would hold talks with Chinese President Xi Jinping, and this could happen as soon as this week based on news reports out earlier. So how would you read into the latest move by China? How far are such tit-for-tat measures a zero-sum game?
Yeah, if you look at it for sure, it's not actually a zero-sum game right now, given the fact that this potential like trade war 2.0 that is ongoing is slightly different from trade war 1.0. So if you look at the trade war 1.0, it's actually between only US and China. But this time around, it's between US and other major trading partners that has a significant trade surplus with US. So if that market has started to react a bit differently from trade war 1.0. So initially, when trade war 1.0, we start to see tit-for-tat measures between US and China. The China stock market will actually tank and underperform against the rest of the world. But this time around, the China proxy, much more, we call it internationally, we call it used as a gauge would be the Hang Seng indices. In fact, the Hang Seng indices performed since the start of this week. So they have been rallying for two positive consecutive sessions since Monday and as well as today. And if you look at from the low of 13th of January, the Hang Seng Tech, which is house those, we call it higher beta, semiconductor AI-related China's play, has been rallying close to 20% versus about 4 to 6% on the same period in the Nasdaq 100. So what does the price actually imply over here? So it seems to us that if things doesn't go out that well between the conversation between President Xi and as well as US President Trump, things could escalate further because US only start lowball at 10%. So initially during Trump campaign, he's looking at maximum about 60%. So it could still escalate up. So because right now this we call it a US driven trade tension is against other major trading partners. So we're talking about Mexico, Canada, and even potentially next down the road could be EU as well, which Trump actually highlighted on last Saturday. So if this thing starts to play out over here and Trump doesn't get what he wants, ultimately he wants these countries, MNCs, to actually shift their operation or manufacturing operation in terms of high-end, mid-end towards US. this particular targeted country may start to gravitate towards the sphere of influence of China instead, because China right now also looking to actually build a major manufacturing hub together with US. So that's why what we see over here is that we start to see this outperformance of these Hong Kong stock investors in the past 2 days.
And speaking of which, right, Kelvin, I'm just looking at some news, and this is impromptu, some news out just very, very recently, about 40 over minutes ago. China announcing their wide range of measures targeting U.S. businesses. That includes Google, farm equipment makers, and fashion brand Calvin Klein's owner. So, all in, what do you think Asian investors should watch out for then?
I think in terms of for Asian investors over here, we talk about for a very short-term perspective, yes, there could be signs of, we call it, two-way volatility will be there for sure. But if you stretch it out from a longer-term perspective, I feel that over here, things that have a cheaper valuation, which is high, will be likely to be more viewed as a more defensive in nature. However, if risk assets that are highly overly rich in terms of valuation, that could be at risk of what I call a potential multi-month or medium-term correction going forward. So that's primarily concentrated on those very high growth AI-driven play component stock that is listed in the Nasdaq 100.
I see. And finally, before we let you go, Kelvin, ChatGPT creator OpenAI as well as South Korea's Kakao, they said today that they plan to form a strategic partnership to develop AI products for the Korean market. Now, when asked whether OpenAI is looking at investing and joining Korea's AI Computing Center project, Sam Altman, the CEO of OpenAI, said OpenAI is actively considering the move, and Altman also said that many Korean companies will be important contributors to the ecosystem of the U.S. Stargate data center project. Any quick thoughts on that?
Sure, boss. On the surface, that there could be much more, we call it rivalry between U.S. and China tech space. But in the long term, given this, we call it the emergence of a DeepSeek that come into the AI high productivity team play, it will allow more competition in this AI space. That means OpenAI, given the fact that it's been the leading one, they tend to actually charge a premium for their services. So overall, with such competition coming in from other players like China, the implementation cost of deploying AI models to actually improve productivity will be lowered, given the fact that there are much more research being done. One aspect of it is between OpenAI and the Korea AI company. So net overall, that could actually potentially in the long term lead to a lower cost of operational costs for firms that want to actually implement AI, we call it training models to boost their productivity. So I do see that, yes, in the short run, there could be some kind of rivalry between US and China, but in the long run, things may get cheaper to implement such AI models, which is actually a plus for the global economy.
I see lots to watch indeed. Thank you so much for the insights, Kelvin. That was Kelvin Wong, Senior Analyst at OANDA. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.